Hey guys, I hope you and the families are doing well. In this short video, I want to share with you what I think is a game changer of an indicator that you can incorporate into your daily trading process. Now, whether you're an intraday trader, a swing trader, or a position trader, I think this will be helpful for you to understand market context and likely market direction. This then feeds into whether you want to have more of a long bias or a short bias. Now, the layouts that you see me go through in TradingView in a couple of minutes time, I'll put links to those in the comment section below so you can click those and then you'll be able to see the same layouts that you see on my screens as I'm teaching you about this game-changing indicator. Market Surge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, then you'll find a link to that in the description and the comment section below. Okay guys, we're going to start off with a high-level overview and then we'll go into more of the day-to-day tactics for how I use this indicator. So we've got two charts loaded up and they are overlaid so the date ranges line up. So we've got IXIC on the top, which is the NASDAQ comp, which comprises around about 3,000 or so US listed stocks. Now below that, this is the indicator, NCTW. Now what is that? That is those NASDAQ comp stocks above their 20-day moving average. Now that gives us readings, and the readings over here are in percentages. This is 75% and 25%. They are going to be the overbought readings up here and the oversold readings down here. So what does it mean when it's overbought? It means over 75% of NASDAQ comp stocks are above their 20-day moving average. Conversely, oversold is going to be when there is less than 25% of NASDAQ comp stocks above their 20-day moving average. Now what you will see is the market will mean revert. You could do this exercise for the NASDAQ 100, the S&P 500, then you'd want to use the indicators NDTW and S5TW for those, but we're just going to focus on the NASDAQ comp. And what you can see is the market will mean revert. It will go from periods of overbought towards oversold, to overbought, to oversold, to overbought, to oversold. So this is very useful if you're a trader in terms of being an intraday trader, a swing trader, or a position trader, because it gives you a sense of where is the market and how is the market likely to move. What is the next swing going to be? So Livermore would talk about understanding what is going to be the next swing of the market. Where is the line of least resistance? Is the line of least resistance to the downside or to the upside? Now I think using this indicator here gives you a really good sense of where are you expecting the line of least resistance to be, to understand the context of how the market moves, how these breadth readings will mean revert from periods of overbought to periods of oversold. So if you are primarily a swing trader and you like trading on the long side, when is going to be most advantageous for you and your strategy? Well, it's probably not going to be up here when the breadth readings are in overbought territory, right? You can see I've lined the dates up, okay? If you're a swing only long trader, probably the 12th of July down to the 5th of August low, that's probably not going to be a very good time for you, right? You can see what happened with the breadth readings, but as you get down to the 5th of August and you can see the market moves into oversold territory, well, from the 5th of August up here to the high of the 23rd of August, that period there is probably going to be quite a good few weeks for you if you know what you're doing, you got a high level of skill set and you know how to trade that. Okay, so this helps you understand, okay, is the market likely to be advantageous or not for the type of strategy that I want to employ? And then you can change the tactics subject to the breadth readings on the type of strategy that you want to employ. So if you really like shorting stocks, well, where is going to be the most advantageous time for you to be shorting stocks? Well, it's going to be transitions from overbought territory down into oversold territory. If you want to then swing trade back on the long side, when's going to be most advantageous? Well, it's going to be when you get these oversold readings transitioning back to overbought readings. So then when you're in overbought territory, it's going to be harder if you're then only swing trading on the long side and you're going against this proverbial market tide. So this is why I think it's really useful both for intraday traders, swing traders, and also if you're a position trader, right? Because you get a sense of the market. You can, again, Livermore terminology. Where is the line of least resistance going to be? Where do I think the next kind of swing of importance is going to be? So you can see that I've lined these dates up. Recently, we've got an oversold reading here for the NASDAQ comp stocks above the 20-day moving average, similar to like we had back in August 5th. So this is why I think it's useful to you to think about your tactics on a day-to-day basis, because if you've just seen, wow, okay, the market's just had a pretty good run here, it's gone from near oversold territory, it's now up here in overbought territory, it can kind of help you with your expectations of the market. Guess what? This is now not the time to be really aggressive swing trading on the long side. Okay, it's probably the time to be easing off the gas pedal a bit. Why? Because the next swing of the market is going to be that proverbial market tide that has now flowed in to then flowing out. So guess what? You probably want to be easing off a little bit. You want to be trading smaller. Potentially you want to be looking for shorts during this time. Then when you get a big flush down here and and you're in oversold territory, well, that's the time where you want to be more aggressive swing trading on the long side. If you're an intraday trader and you're either shorting or going long, this can help you to understand, okay, the context of the market. When are you potentially in overbought territory and the market is then going to transition from trending up to then trending down? And also, if it's just gone on a trend down like this, when do you potentially then want to switch and go, rather than having a short bias, to a long bias? Well, for me, it's going to be around these extremes in terms of overbought territory and overbought territory. Oversold territory, sorry, and overbought territory. So I just think it's something that's really useful just to add to your daily process to understand, okay, where is the market from a breadth standpoint? I think this is one of the most useful things that I do on a day-to-day basis in terms of my daily planning. Okay, what am I looking for here? What am I expecting the market to do over coming sessions, over coming weeks? Where do I think the line of least resistance is going to be? If we're up here in overbought territory and we're getting like high 80-90% readings, I want to be very aware of that. That's not a time for me to really be pushing swing longs. If we're down here and we're getting deeply into oversold territory and then we get some capitulation type action, then that is potentially a time that I want to be looking to push it in terms of swing longs, entering positions to try and capture as that market tide turns back in. So what I'm going to do is I'm going to put these layouts and a couple of others in the comment section below, so then you can copy it and then you can have this in your own TradingView layout. So I really hope you guys have enjoyed that video, you find it useful, adding this to your daily trading process. Thank you very much for watching, thank you very much for supporting the channel, and I will see you in a future video.